Welcome back, everyone. We got another video for you guys today. Today we're talking about capital gains. What are they? Why does it matter? And how to use them. I'll be talking about them with you. My name is Joshua Thompson, the owner of Thompson Tax Group. Now let's get into it. First off, what is it? A capital asset is a significant asset that you can own either personally or in a business. An example of a capital asset could be your home, real estate that you own, or even a vehicle that you use day to day going to and from work, or a vehicle you use in work. Now, capital gains and losses occur when you sell these capital asset. Whether you sell the capital asset higher than its basis, you have a capital gain. If you sell those capital assets lower than its basis, then you have a capital loss. Each one is treated differently in the eyes of the IRS. I'll give you an example. Say you have a car and you sell it for $35,000. But originally you paid $25,000 when you first purchased the car. Now, in that situation, you have a $10,000 gain subject to capital gains tax rate. Capital gains are classified two ways. You have long-term and you have short-term capital gains. Now we must ask ourselves, why does it matter? Why do we need to know if it's a long-term capital gain versus a short-term capital gain? And the reason we want to know is because one gets preferential treatment in the eyes of the IRS than the other. And the one you want to have is long-term capital gains. A capital asset is considered long-term if you hold it for more than a year. It's short-term if you hold it 1 year or less. Now, a long-term capital gain is taxed at a flat rate in the eyes of the IRS. You have the 0% tax rate depending on your tax bracket, the 15% tax rate, or 20% tax rate. The short term, however, is taxed at your ordinary income bracket. So it could be as low as 0%, 10%, 20%, or as high as 37%. Now we must ask ourselves, how can we use this information? How does it benefit me? How do I know how to use this when I get ready to sell stock, when I get ready to sell my home, or even sell a vehicle that I've had for a number of years? And the number one thing we want to know is, what is our tax bracket? By knowing our tax bracket, we know what category our long-term capital gains will be taxed at. If you see on your screen, you'll see three categories for long-term capital gains: the 0% tax bracket, the 15% tax bracket, and the 20% tax bracket. Depending on your taxable income, you could fall in each one of these brackets accordingly. What this means is, if you make $79,999 in 2020, all from capital gains, you pay 0% tax on that, as long as you have no income from other sources. Now, if you made $80,001 in 2020, that entire capital gains is now subject to 15% tax rate. This capital gains, long-term capital gains, is not progressive like the ordinary income tax bracket is. Like I was saying earlier, the short-term capital gains is subject to ordinary income tax. The long-term capital gains has this preferential tax treatment. Lastly, you want to know this because you want to know when to time your sales. You don't want to sell a stock if you only had it for 360 days out of the year. You want to wait those 5, 6, 7 extra days or week to make sure that you get the preferential treatment that comes with long-term capital gains. I hope you guys enjoyed this information we put together for you guys regarding capital gains. What is it, why it's important, and how to use it going forward. If you guys have any questions at all, feel free to call me at 805-364-0908. Email me, Joshua at thompsontaxgroup.com, or check out our website at thompsontaxgroup.com. Please like, subscribe if you guys learned something new. Until next time, I'll see you guys later.